Welcome to the Accounting Arc Podcast, where analysis, reaction, and comedy collide to tackle the big topics from the world of accounting and beyond. Join our trio of transformation agents as they discuss the hottest topics in and out of the profession, from breaking down industry trends, to reacting to everyday events, to uncovering the hidden humor in numbers. With wisdom, insight, and a dash of levity, they're proving that accounting isn't just about the numbers. It's about life. Because after all, accounting is in everything. The Accounting Arc Podcast starts now.
Welcome back, everyone, to another episode of Accounting Arc. We are here kind of reflecting a little bit on a lot of the disasters that have happened recently. So a lot of us have been getting some pretty bad weather in all parts of the country in all different ways. We saw some vendor shutdowns occur, and our own Liz actually had a pretty big scare on the slopes. So today we thought we'd talk about business continuity or firm continuity, and hopefully, when the whole Snowmageddon thing happened, was that last year? Was it 2 years ago? Hopefully a lot of you addressed it at that point in time, especially as you came out of the pandemic and had started to build more business continuity there. So we're going to maybe focus on the other two, and draw to the two of you. Where do you guys want to start?
Well, I didn't hear about Liz's close call, so I feel like that's a great way to kick this off.
Well, people continuity is very important, and my team was all joking last week that they were happy that there was a key man life insurance policy and a buy-sell agreement in place with my business partner, because I almost died. So the lucky thing is I just broke a leg and I'm totally fine, and nothing long-term or horrible is going to happen. But I did fall about 200 yards and hit a tree at about 25 miles an hour on the ski slopes on like a 59-degree angle, which is like that if you don't ski. So it was a close call, really, really rough moment, but I was lucky that I had really good friends. I was on a trip with a bunch of accountants. So, some of my best friends in the world were there and were able to help me through that and get me to the clinic and make sure ski patrol was there. And that was actually terrifying, getting taken down in a toboggan off of the side of a cliff. That part was really, really a little, because you have no control, right? At least when you're skiing, you're in control until you do something like I did, right? Which is, I think I hit a rock or a root, something popped my binding off and just redirected me straight off instead of around. And even the most technical of skiers sometimes have bad days. We saw in the Olympics, Lindsey Vonn broke her tibia. Luckily, I broke my fibula. So other bone in the lower part of the leg, much less important. So.
Mm-hmm. Oh, man. Trees are very dangerous. Trees.
I was still convinced I was totally fine. My friend Kenji was with me, and I was like, I'm pretty sure I can ski down. And he was like, no, you should not. I watched what happened. You should not ski. But I'm still convinced I could have made it off the mountain without the toboggan.
Adrenaline's a weird thing that will make us believe we can do things we should not. That's for sure. But so the moral of the story is, you can still walk. You survived it, or not walk, work.
Not yet.
You survived it. But you do have things in place in your firm. Yes. Should something more catastrophic had occurred.
Correct. So not only do we have a life insurance policy, which effectively means that my business partner and I took life insurance policies out on each other. So if I were to die in a catastrophic event like this, she would get, let's just call it $1 million. And then we have buy-sell agreements, which means that she would be able to, before anything went into estate, will, trust, any of that, she would be able to buy my interest in the business directly, and then the business continues to operate, and there's no disruption of service. There's no question on who's making decisions or who owns it. It's all pre-agreed to. We have, the valuation figured out at any point in time. And vice versa. So if something were to happen to her, that I would get life insurance proceeds and be able to buy her estate out before any of that went into probate or anything else. So it, means that we have continuity of business from a key man position, from an ownership position. So if we're making big decisions that require, majority vote, like it can still happen. It doesn't put the business into limbo for any amount of time, which is very significant with small businesses. Because, could you imagine if my son inherited the business and then Melissa was like, we need to vote on this. And my 9-year-old was like, I have a purple crayon. I'm not sure that would go so well.
I think he'd be better than some business owners that we know out there.
Maybe. He's pretty smart. He did. We were looking at buying a business actually, and it had physical assets, and he was like in the conversation, he goes, Mom, you got to think about the tax implications. And I was like, what do you mean, bud? And he was like, property taxes are going up. So you got to factor in property taxes to your calculations when you're looking at this. And I was like, the freaking 9-year-old is telling me to think about high property taxes on commercial real estate. I've done something right or something wrong. I guess time will tell. So maybe he might be fine with it, but we thought it better to be proactive and not have, the kid inherit the business, but instead get some money,
Right. That makes a lot of sense. I also, and I just found it. So this was like 6 years ago that I had read this article about practice continuation agreements. And especially for myself being a sole proprietor right now, there is no other partner to end up buying me out or things. And so I pulled it up just to kind of look at it. And it says practice continuation in event of death or disability. So there were 2 major sections in the event of a death, who would be contacted, and there's a whole bunch of clauses around whether clients are going to be retained, whether it's to sell, what happens, what transfers to the estate, the fact that there should be business efforts consistent with our own practice regarding billing and collections, no client retention. Oh, actually, sorry, I'm reading this now that I'm realizing it's actually for another firm to actually come in and do the practice continuation. Interesting. And then in the event of a temporary disability or inability to practice, what they would do, if there's an option for me to return on a part-time basis, once that, I guess, is cleared. And then what they actually do. For example, there's a clause that says, after we stop servicing your clients in accordance with the agreement, we agree to pay you 150% of what you would have paid, what the client would have paid you. And they had acquired the client over the years. There's a whole set of clauses around tax treatment of payments, and then some just final provisions, including designating heirs in the event of an actual death.
Wow. That's really interesting. I'm curious if either of you have ever done any advisory work with small businesses, recommending that they implement these types of programs or things.
All the time. Yeah. All the time. Especially, we're sitting in a moment where we have a lot of boomers that own businesses and, small, privately held, really well-run businesses that don't necessarily have succession in their family. They don't really know what's going to happen. And if they don't have a succession plan specifically, then we talk a lot about what to do, what happens to them if they, have a heart attack, what's going to happen? Or maybe they win the lottery. They don't want to deal with the business anymore, but where does it go? Who does what? And so it's all kind of tied into succession planning for us and our advisory. But we do talk to them. We're like, okay, even if you don't have your succession plan identified, you still have to have a catastrophic plan. What is the business continuity plan if something catastrophic happens? Do you have disability insurance in case you are disabled and you could afford to take the business and pay somebody else to run it, right? Versus you running it if you're not capable physically or mentally because of whatever happened. And do you have enough, insurance, short-term, long-term disability to pay yourself separately.
Right.
So the business can afford to continue. Because most business owners don't think about that, right? They don't have disability
Oh
insurance.
no.
They're not thinking about dismemberment. They're not thinking about death. It's like, oh, someone else will figure it out. And you know what happens if nobody is capable of taking over the business? It ends up in probate. A lot of times, like, the families inherit it and then they don't know what to do with it, so they sell it for pennies on the dollar of what it could have been sold for. Occasionally it'll end up with a court receiver because there'll be lawsuits around it, and then the courts will
Yeah.
appoint a receiver, which is generally a lawyer. I actually work with a bunch of those lawyers in Arizona, and I've worked on companies that have ended up in receivership for other than just like bankruptcy or criminal activity. Those we've done as well. But it's really hard and it sucks because it's like, then you have some outside party taking a big fee, trying to operate the business, trying to do its best. And generally, it's just like a time to liquidate situation.
Yeah.
And that's just hard. And it's not fair to clients. It's not fair to the people on your team even. And, there are ways, like, even if you don't have a business partner, but you have a key employee that, maybe you have a director of operations that's amazing. Like, you could take out a life insurance policy on yourself for them to be able to buy you out, or buy your estate out if something bad happens. There's lots of creative ways to do this, but continuity of people and continuity of decision making and ensuring that, everything can keep going is very important to plan for and to think about, like, what happens if,
Yeah. It feels
right?
very overwhelming to think about. Like that's a lot of moving parts, and frankly, like having to think about things that you kind of don't want to think about. Um,
Yeah, of course.
I really don't like to plan for the idea of, my death or dismemberment, or, any other type of, thing that might incapacitate my ability to, continue to run the organization. So it doesn't surprise me that a lot of small businesses or businesses haven't thought about it, because you kind of just not only is it something you don't think about because you're busy, but you kind of don't want to think about it, and it's overwhelming to think about it.
Well, I think
Hmm.
that's the analogy to that too. I completely agree with you. The analogy to that is, though, also is simply estate planning, like was said
Right.
earlier, right? So from an accounting standpoint, whether your clients are businesses or whether your clients are families or individuals, this is something that I think it's a great thing to offer, both the concept of what if, and to help them think through that in a logical, non-emotional way,
Mhm.
sympathetic but non-emotional way of, like, this is the reality of what you need to think through. And sometimes it is painting that picture of this is what could happen. It could end up in probate, it could do all this stuff, and there's actually damage to the family. So you probably
For
want to
sure.
mitigate that and just think ahead. Um,
Yeah. So yes, we can talk about it empathetically and be kind in the conversations, but still confront the big issues. And I think that that's like a key piece of those difficult type conversations. And we do have clients where I've been like, "Hey, you have no plan here. This doesn't seem like the best business decision." And they're like, "Well, I'll be dead. Someone else can figure it out." And to me, that's like a really harsh answer because that's putting the burden on, you know,
Yep.
whoever else in the future. And
yeah.
also, some people are just like that. And
And
that's
if
hard.
that
But we talk. Sorry, go ahead.
I was gonna say that would be a red flag for me on the client,
Hmm.
because it's not just about them, it's about the clients, like you said, and the employees. Because
Right.
that's my biggest thing now is, like, I have a staff of 35. So I need a
Right.
lot of my decisions around if something were to happen to me or the business, that many lives get disrupted. And that's
Right.
just my staff, not even my clients that we're helping.
Hmm. Yeah. And so we have a couple of things in place internally beyond just like these high level disaster type situations where, like, people are cross trained. We have a requirement with, like, even with myself, like, at least one other person is involved in everything I'm doing. So they understand what decisions I'm
Right.
making, where the progress is, what's going on. They might not be the one doing the bulk of the work, but I'm giving them updates and making sure that, like, I'm not the only one that holds this knowledge and that they know where to access it. So that's part of it is, like, we have a, cross-training, two-person requirement. The other thing we talk about is like permissions, right? Because we use a lot of software, and I am the primary admin for the firm on most of these softwares.
Yep.
So, like, if I'm out of capacity, like, what would have happened if I hit my head and I was in a coma and we needed access rights revoked, added, changed, right? So, again, same thing. We have at least one other person on every other software with that admin access and ability to do that, which is like, when you think about it from an IT perspective, sometimes they're like, oh no, you need to lock this down, but it's like both, right? So you have to have that balance and understanding like who can use what and why, and when is it strategic to have this person versus this person and what kind of access. And so, those are other considerations we have on like the people side. And then, if we like in the past, we've had other like key people on the team that holds a bulk of the client relationships. And I think we've gotten to the point where that's like more diversified so that it's a little less of a risk. But it's like the same things you think about when you think about a business or investing. Like if there's concentration, there's a risk. And so we go through the business from like a people perspective, and then this goes over to the vendor side. Like we were talking earlier, like what happens if a vendor shuts down and they're a key vendor? Like what is your backup plan, right?
Yeah, that's a big risk, especially a lot of times, you bring in vendors because they have a specific expertise or specific solution that you don't necessarily have in-house. And so that can be very difficult to navigate if something happens. I mean, we've definitely seen it historically in the profession where either businesses shut down or businesses themselves have a catastrophic event. I can remember a couple years ago, there was a very popular hosting platform vendor that had a ransomware outage, and there was like a week plus of entire network infrastructure being down, and those firms were kind of like dead in the water because they didn't have access to their systems, their data, their software, even their email. And that can be not only disruptive, but I mean, that could literally crush an organization.
Yeah, if I remember that one correctly too, that happened right before the tax extensions deadline.
You're right.
Like it
That's
was,
right.
right? So that was even more like, whoa, because you couldn't file, there's no additional extensions that you can do. So that would have made a whole bunch of clients late, or it did make a whole bunch of clients late.
Yeah.
I think in accounting that we too often forget that we have to put our own mask on first, like in an airplane, right? Put our own mask on first before we help others. And our whole thing is, oh, there's clients, I gotta help the clients, I gotta do all this stuff. And we're giving so much of ourselves that we're not taking that time to take care of ourselves. It's part of the reason why at the center, we created this whole personal resilience program, which is really, for you to be that strong rock and foundation for the clients, you need to be solid yourself first. So it really is a matter of taking care of ourselves, and then we can take care of others. In fact, we can take care of more others the stronger that we are as a foundation. And that's also why a lot of what we do is based in teams, because then even if you're faltering, some of the teammates can jump in to cover or to allow you the time to rest so that you can rest, but we're still holding everybody up. So that's why I think working together in a team is so important, as well as taking care of yourself.
Yeah. Well, and it's interesting too, because, we've evolved, the technology has evolved that I think has, reduced the risk in a lot of ways, because, that was a period in time when, a lot of our software was server-based software that required hosting in a an environment. And now, with SaaS, you're kind of you have distributed risk because you don't have as much concentration as in those types of scenarios. And there still are firms, though, very much, because there is still a lot of server-based software out there that can create those risks. But I think it all comes down to having to have those conversations. I mean, y'all have both talked about like exploring the what ifs, and it's so easy to not pay attention to the what ifs. But having those conversations and maybe even desktop exercises of like, what if this thing becomes unavailable? What do we do? Kind of role playing those out.
This actually makes me think too. I just read a research article from Gartner that was talking about cybersecurity and how do I place a value on cybersecurity. And a big part of their recommendation was to tie it back up to a business objective or a business impact. So if I were to have ransomware hit me, how much productivity is impacted, especially if you're still billing by the hour, how many hours are going to be lost? How long are you willing to accept that window on
Right.
that? If a vendor were to go inoperable, if the vendor were to hit by ransomware or something, what's impacted? Can you work around that, or is this critical? And then it talked about looking at the value of that spend to reduce that window or the cost of that window of downtime to a level that's acceptable to the company, which may be different for different companies. I thought that was a good
Right.
way to really quantify cybersecurity spend.
Yeah, I totally agree. I think it's very interesting when you're like vetting vendors, when you're thinking about how to implement systems, when you're like putting your critical processes in the trust of an external software or company or, whatever it is. Like it's hard to think through all of the what if scenarios, and it's hard to think through like, do we believe they have enough funding to continue? Do we believe that, our data is not going to be lost? Do we have a backup plan? Like what's the redundancy here, right? And like we had a project management software we used years and years ago that pivoted and decided not to support accounting firms anymore. And one day just shut us off. And we didn't have much preamble. And so we lost all of our processes, all of our tasks, all of like everything
Wow.
for, a subset of clients. And that sucked to rebuild. Like we had to rebuild SOPs and task lists. And, luckily at that point we had a really great team that like they knew what they were doing. They were able to continue servicing. But like if I had an untrained team and it was bigger, it was very, like we were very small at the time, that would have been extraordinarily painful instead of a 1 month delay where we, kind of set out an email to our clients and we're like, hey, just FYI, like this is happening. Like, please just, we're going to have weekly meetings instead of monthly right now to make sure everything is, up to par and we're not missing anything in our plans. But that sucked. Like that one really, really hurt.
Wow.
And we didn't even think about that. Like I never thought that that was a possibility.
Right. Well, and I think that's also part of the challenge too, is there's a fine line between like almost over-indexing with respect to like how much of a safety net do you need to have? Like in your example, Liz, I mean, it happened. So had you had backup documentation for every single one of those things, it would have been worth it. But if that had never happened and you had almost like added 20% of overhead of the work, creating secondary systems just in case, that's also very expensive to the organization too. So I guess it goes back to what you were saying, Donnie, of like trying to figure out like what is that financial impact, and then figuring out how much you're willing to dedicate or invest to prevent that is kind of where you need to evaluate how much time and effort to spend on the what ifs.
Yeah, and if you go back to kind of your risk assessment basics, right? It's what's the likelihood of occurrence and then what's the severity of impact. And those are the two factors I use against that dollar amount, or however you compute the dollar amount, because it could be
Right.
hours that you can translate into dollars, either lost revenue or additional wages paid, right? Opportunity costs, to take those and you apply those two factors, which gives you a weighted cost if you want to use that type of an approach.
Yeah, that makes a lot of sense. It's yeah, it's tough. There's a lot of risks. There's a lot of what ifs, and ultimately you just have to respond. I'm sure Liz, like, there was kind of that oh shit moment, and now we just got to move forward, right? Like it's you just have to have an organization that can just kind of pick up and just be willing to put in the work to recover and
Yeah.
figure it out.
Absolutely. And one of the things that I have done since that moment is like in every vendor, we talk about what their continuity plan is, like what their backup plans are. How do we get our data out off of your system? Like if disaster were to happen, can I download it? Is there a backup of it? Or are we talking like I just have to go take screenshots and then rebuild it because I don't want to do that, right? And it's surprising how many vendors have not thought about this or thought about like bulk exports or backing up to, OneDrive or Google Docs or whatever. It's hard. It's hard for them to think through that because, of course, they're all focused on the future. So you got to ask those questions and really think about it from a what if perspective. And if you're not satisfied with the answer and it's a critical component of your business, then that's not a good continuity plan. Right. And so like that should come into play quite a bit. And then just how trustworthy they are. Like we've seen a number of vendors hold in this space, and I would say at least three-quarters of them, most of the industry is not surprised by because we just know they're not that trustworthy. And that's really sad. But if you are surprised by one, like you got to step back and think why and how do I insulate myself from the next to make sure I'm not in this situation again.
And how would you say, like, um, you can evaluate that? Like, I know for the three of us, we are very active participants in the profession. We're at the conferences, we're talking to people, we're meeting with people. Like, we kind of, have a lot of exposure and opportunity to maybe evaluate that type of
Mhm.
criteria, but not everybody like gets as involved as we do. So, if you're just an accounting firm who's kind of like doing your thing and not, hitting the conference scene and everything else, what do you think is a good way that people can like begin to try to evaluate vendors
You
based
know,
on that?
One of the things our clients come to us for is software and technology and process and like actual services in accounting. So they ask us as the experts in this field, who should I trust? Why should I trust them? And so it's our job to be the experts for this genre of software. If I am looking at like security software and IT stuff, I'm going to talk to somebody like Donny and say like, hey, you are more of an expert in this field. Can you help me make sure that we're doing this right and that you've looked at these things and talk through the what if scenarios? But if we're talking like business in general, one of the things I try to think through is like, okay, so if everything goes right, this is the expectation. Wonderful. Like, let's pursue that path. If everything is like mediocre, this is the expectation. What happens? Let's pursue that path. What happens if everything falls off a cliff and dies? What does that look like? And let's explore that path. And so you can identify like what is critical to your business, what is not critical to your business, what is a pain in the butt versus like what is disastrous and what could cause like actual closure risk. And evaluate and kind of bucket in that way to help you think through the potential. A great example is we use a team in India to help us with our back office processing. There were a bunch of things that I had on my list before I chose that vendor. I wanted US contracts. I wanted to make sure they had a significant team, that it wasn't, 10 people somewhere. I didn't want to hold the employee. I wanted a contractor relationship where that company had to hold them accountable. I also wanted to own our processes and own our systems, right? And so there are very few vendors for that particular thing that fit all of these requirements. But why did I have so many requirements? Great question. Because if that part of the business fails, that is critical to
Right.
service delivery for our team and difficult to replace and train quickly. And so if all of the processes are on our systems, if we own all of the SOPs, if their team is entering our systems to, mark tasks off, it is much easier for me to manage it from a high level oversight. If I just say, okay, now this is your job, you go do it in your systems, we don't have visibility, we don't own the SOPs, we don't have the knowledge, if they disappear, then
Mhm.
we have no support and we're stuck in a really bad situation, right? But that is a critical process, right? That, like, if that doesn't happen, the rest of our work doesn't happen, and then we fail to deliver on our contract. So for me, it was very important to identify critical versus non-critical, and then build requirements around what our business needs for those critical things. So I try to think about it in that framework, if that makes sense.
That totally does. That's very similar. So on our team, even though we outsource certain things, we have the procedures, or we have them document their procedures so that we can see it, and it's on our systems sitting there. And totally agree with you on the we own all the systems. We even make them use our email systems rather than using their email systems so that we have full custody of all the data and communications that's occurring through that.
Yeah.
Right.
Well, and that's a good point. Like really like evaluating and sticking to your guns because I've seen it, in many different venues where people will come in with their set of requirements that they have defined, maybe based on the level of critical need for their organization, or maybe just because it's their personal preference. And then once they get in and get excited about the solution, all of a sudden those requirements will kind of like, not so much, not so much, and potentially put themselves in a scenario. And if it's a non-critical function, then maybe there's ability to do that. But just being intentional about making that decision is important.
Coming back to your question, so part of it is I think that's why a lot of us are on how do you
Right.
look at the vendor. Part of it is talking to a lot of us because a lot of us will give that advice for free. Anecdotally, I always tell a client like, if you buy me lunch or dinner or whatever, it just has to be lunch. It doesn't have to be something super fancy. You're welcome to pick my brain because I'm curious to know what you want to know and why you're looking at something for that. But also, I think for myself, one of the things I do is I go look at who are the executives and who are the founders, and can I see their track record? Because if I see someone on there that's coming from Silicon Valley that has just these series of startups, I'm like, they're going to end up jumping. So do I really want to be with someone where they're just trying to build enough to sell, which is usually just sales and marketing, and there may not be as much product behind it, or is there someone that actually understands what we're doing, that shows some continuity to particular projects
Yep.
to really see them through?
Awesome. Just buy any lunch next time. That is good to know.
Well, and I think, like, unfortunately, as you mentioned earlier, Byron, like, this is a difficult topic. It's hard to talk about. It might not be the thing that people are thinking about. They're not thinking about continuity plans. They're not thinking about disaster recovery or how vendor selection affects that, or what happens if their CEO is an idiot and decides to, like, fall off a cliff, right? Like, these are not the things that people are thinking about on a daily basis, right? And so, I think it's good to start this conversation. It's good to think about it. And we are trained as professionals to think about worst case scenario, which, sometimes is detrimental in life, but also sometimes protects you from what could have happened otherwise. So I would encourage everybody to think about it. Don't dwell on it, but think about
Right.
it, and make sure that you have a plan for redundancy, and you have a plan for making sure that this business, your whatever business you're working for, you're asking those questions, you're talking to your clients about it, and you're making sure that, like, if you're recommending a tool internally, this tool is not going to go away and, like, take your critical information down where it makes the rest of the business harder to operate.
And And from what you've said too, and what we've discussed, I think a lot of times people hear business continuity and this type of stuff and they go, well, that's a big company thing. But I hope they
Right.
heard from Liz's and my examples. This is actually a small company thing, and it's even a bigger risk for small companies because you don't have all the other partners and things that can just take over your book. Like, and your clients
Yep.
and your employees really become beholden to you and your ability to continue operations.
And quite frankly, if your clients aren't asking you what your continuity plans are, they're not doing good vendor selection.
Fair. You mean they're just being annoying if they're asking for continuity
They should
plans and
ask. They should know that they are not going to have their critical accounting, tax, audit, whatever it is, information disappear.
salespeople love those questions too. It's their
That- That's
favorite.
Yeah.
that's an interesting comment about the clients because that is something that I am starting to talk to my clients about. I mean, I'm only 50, so I've got a while more, but it's interesting that a couple of clients have actually asked, like, so what happens? What's going to happen? I'm like, what are you talking about? Like, it's too young to talk
Right.
about retiring.
They
It's a
clearly
good question,
value you, so it's time to raise their bill also because they clearly value you
I
very
raised
much.
my rates. Yeah, I was like, well,
Subsidize those plans.
Yeah.
That's awesome. Well, I've learned a lot. This has been great. A lot of good things to think about, and I think it's also good things. I mean, if you're entering the profession and you're interviewing with companies to move to, like these are start your career with, like these are also good questions to ask in the interview process. Like, what if Bob dies tomorrow? Is this firm gone?
mm,
So.
And if you need help navigating either vendor shutdowns or how to think about this or what to do, like please reach out. Like, obviously you can just buy Donnie or I lunch and we'll talk your ear off about what to think about. So
That's awesome. That is awesome. Well, very good. Well, everybody, hope you enjoyed this like uplifting episode of ARC podcast, but it was definitely some good stuff to discuss and definitely fun. And Liz, we're so happy that you are okay and
yes.
safe and able to
thank
continue
you. Yeah. I'm
operating
pretty
your
happy
business.
I'm alive too. Yeah, that's
Yeah.
a good thing. Yeah.
No doubt. No doubt. Well, thanks everybody. And we'll see you again soon.
Thanks,
Bye
guys.
for now.
The Center for Accounting Transformation provides business professionals with a network for utilizing innovations that are ready for adoption, the training and resources necessary to apply those innovations, and an opportunity to engage the talent and community needed to further the pursuit of innovative accounting practices that drive responsible and mindful business performance. Find out more at our website, www.improvetheworld.net. And if you're interested in sharing your own transformation stories, please contact us there.